Hey, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. You are tuned into our YouTube channel. Thank you very much for joining us. If you like this video, please give us a thumbs up and consider subscribing. So it is Wednesday, February 17th, and today I want to talk a little bit about patience because we've had some huge moves. We're going to look at the rate of change for 73 periods to show that there are dozens of ETFs that are up more than 20%, some even up more than 50%, and even up more than 100%. And these are big moves, and taking a new trade now might be pushing the envelope a little bit. And so that's why it's maybe time for a little bit of patience, just to sit back and watch and let the market come to you for your setup that you like. So we're going to take a look at that 73-day rock. We're going to look at 4 industrial-related ETFs that are looking strong right now. And I'm going to show you how to use the ATR Trailing Stop when you're in the trend monitoring or trade monitoring stage. So a lot of indicators, all indicators pretty much, have a default setting. So for RSI, that would be 14 periods. For MACD, it'd be 1226. And for the rate of change, the default is 12 here at stock charts. But the thing about an indicator setting is a lot of times you need to think about the time frame you're interested in when you're thinking about that setting. Now, I'm just going to use the rate of change. And what I want to do is I want to find out which ETFs are really extended over the last 73 days. And why did I pick 73 days? Well, I've got the inspect button clicked on this sharp chart here, and there's the low for SPY on October 30th. And if I click and drag to the right to the current day that I'm on, this is for Wednesday when I'm recording, you can see over on the left in the middle, we have 73 periods. So I set the rate of change there. So SPY is up 20% in 73 trading days. That's like 1, 2, 3, a little over 3 months. That is an extraordinary gain. And especially if you annualized it, it would be a really serious gain. So this tells me that SPY is quite extended, but it is clearly in an uptrend. And when things are overextended or seem overbought and the trend is up, that's when a little patience may be helpful. Because, you need to let the market come to you. If you're taking a shot now, it might be like trying to force a 3-point shot. And it's better to probably pass it around, take a little time off the clock, and wait for an open shot that has a higher percentage. And that would be with some sort of a pullback. Now, right now, everything is bullish. I'm going to run a scan here in a minute. But another period that I'm interested in is the 6-period rate of change. Because you can see SPY's kind of flattened a little bit over the last 6 days. And I want to see which ETFs are leading and lagging over this 6-day period. So I've got a favorites list, and it has 117 ETFs, and they're arranged in a top-down manner. You've got your major index ETFs, your sectors, your industry groups, commodity-related ETFs, bond-related ETFs, international, and currency. And it's a very focused list. 117 is focused, believe it or not. But what I'm going to do is I'm going to scan that list, and I'm going to rank the results by the rate of change for 73 periods. And you can see here that we've just got some obscene gains at the top. The Grayscale Bitcoin Trust up 239%. The marijuana ETFs up around 140% since November, basically. And so if you scroll down, you can see these are just huge gains, 90%, 70%, 60+%, and so on. And so, look at this. And so I can put a cutoff threshold on this if I want. So say I want to look for everything that is up more than 20%. That's more than the S&P 500. That is a huge amount for a 73-day advance. And I'm going to run that scan, and it is going to refresh. So 88 of the 117 ETFs are up more than 20%. So there are a lot of ETFs that are way extended. That doesn't mean bearish. It just means that maybe it's time to sit back and watch the market and wait for it to come to you, because a lot of stuff is quite extended at this moment. If we click on this column here on the right, we can see that everything is up at least 20%. There's SPY. Out of these 88 ETFs that made the cut, it is the weakest. And then you've got healthcare providers, telecoms, home builders, insurance. XLK is at the bottom of the list. But, it's at the bottom of the list with a 23% advance. That's not too bad. Now, if I remove this and here, and I just run the scan for 73 days, and I click again, then we can see the ETFs that are down. And it would be gold miners, bonds, gold, the dollar, treasury bonds, the yen, aggregate bonds, utilities, defensive type issues. So gold, the dollar, bonds, and utilities are not performing well. And that makes sense when you've got such a strong bull market underway. So now let's change this scan to 6. We're going to rank by the 6-period rate of change. And there we go. So Bitcoin is even at the top on this one. And then if I look at the laggards, we've got more laggards. We've got more ETFs that are down over the last 6 days. So you can see here some clean energy ETFs are down. Maybe they're due for some profit taking. Genomic revolution, silver miners, cybersecurity is down. That could be due for some profit taking as well. ARC Innovation and Procure Space ETF is down, as well as the Russell is down around 2% over the last 6 days. And it is due for a rest because it's been up like 40% in the last 3.5 months or so. So here's a chart of IWM, and I've got the 73-period rate of change up 45.81%. You can see this the second time in 2021 here that it's been up more than 40% over a 73-day period. So we got one here, and then we got a very short pullback there, and we've got another one now. So the pullbacks have been really short. You can see here that this was like less than a week, maybe a week, and maybe a week here. So maybe that is the new correction here, is just a week. But you don't have to go back very far to see that, previously we had some bigger pullbacks like this triangle consolidation in June into July. And then here we had a pullback that actually lasted more than a month. So these things do happen. And I think that is the prudent way to approach this. I wouldn't short the market because we're in a bull market, but also wait for it and let it come back to me, get an RSI in that 30 to 50 zone, and then look for a bullish continuation pattern. So here at trendinvestorpro.com, I'm pretty much in holding mode. We've got a bull market, we've got uptrends, we've got lots of new highs. But as I noted in the weekend video, we've gone from basically oversold to new highs, and there are not many setups out there. And I went over a number of ETFs that I was monitoring. It's basically the trend monitoring phase that is kicked in, and that's when we've kind of just monitor these positions and let them ride as long as they can. So check out trendinvestorpro.com if you'd like to learn more about our services. So tech stocks are getting hit on Wednesday, and I highlighted a couple of industrial-related ETFs over the weekend, and here's the chart. And the top chart there is IYJ, and it's an industrials ETF, but you can see that 22.7% comes from the software and services industry group. And so that basically means it's got a lot of technology in that sector ETF, which is kind of weird. They're just calling it an industrials ETF. And you look at the top holdings, PayPal, Accenture, and Square are in the top 10. And those three are, of course, technology stocks. And if you look at this chart here, you can see a consolidation, a breakout, consolidation, a breakout. And it's getting weighed down a little bit today with some weakness in technology. But I was looking at XLI, and this chart looks bullish as well, even though it is less strong because it doesn't have that technology component that IYJ has. You can see over here, Honeywell and Union Pacific, a railroad, are the top two holdings. And then we've got some classic industrials, 3M, General Electric, Deere, Lockheed Martin. And so you still see a surge, consolidation, surge, a long consolidation, and it looks like it's poised to break out and move higher. Now, whenever I see a sector that's looking strong, I always try to go down another level and look at a couple of industry groups within that sector. And we're going to look at jets. I looked at jets last week because it was breaking out of a little falling flag type pattern, and it followed through a little bit. So if you look at jets here, there's that consolidation. It's kind of like a flag wedge. You had basically a big move up, and that was above the June high finally, fell back and then broke out, and it looks like it's ready to continue higher. And I also pointed out that RSI moving into that 40 to 50 zone tells you you've had a mild oversold condition. Sometimes you get below 40, so you get a more modest or a more oversold condition. But as long as you don't go below 30, I deem it as a healthy pullback in RSI. So you get to this zone, and that's to be on alert. And we've got a breakout here, and jets is looking positive. And then the other one is the Aerospace and Defense ETF XAR, and it is also looking positive. It had a little pennant-like consolidation and then a breakout, a hard throwback at the end of January with the rest of the market, but it did find support in this zone here from the prior pennant. And there you can see RSI in that oversold zone, and we got the surge. So this one is still looking strong. So what do I mean by this trend monitoring phase? Well, here is jets, for example, and I'm on Stock Charts ACP now. And there you can see the breakout. And then I've got here an indicator from the Trend Investor Pro Indicator Edge plugin. It's the ATR Trailing Stop. And it's going to trail the highest close by 2 ATR values. So as long as prices rise, that will rise. And on the lower right, you can see that icon for the plugin. In the indicator window, I've got Stoke close, and you can see it turned bullish there in September, and there was a consolidation and then a breakout, and it remains bullish. It turns bullish when it moves above 60 and stays bullish until it moves below 40. Now, there are a number of other ETFs that are in this trend monitoring phase, if you will. You look at XLF, it's been very strong. It had a little flag and a breakout, pretty sharp little flag, a pullback there to this consolidation zone here, and then a breakout. But the ATR trailing stop is continuing to hold. And then if we look at something energy related like XOP, it's doing the same thing. You know, it's got this pullback here, the breakout, and there's the ATR trailing stop. So basically there's a time to look for a setup, and I don't think that time is now. And then there's a time to manage something that you're already in, or just have some patience, do some extra background reading, or study the charts a little harder. So that is a wrap for today. Thanks very much for tuning into this video. If you like this video, please give us a thumbs up and consider subscribing, and check out trendinvestorpro.com if you'd like to know more about our services. Thanks again for tuning in, and have a great day.